One of the largest health insurers has raised the legal alarm once again. The U.S. Justice Department is investigating United Health Group ticker symbol UNH over Medicare billing practices, as well as its pharmacy benefit manager Optum Rx and how it reimburses doctors. The probe includes both civil and criminal requests, with investigators looking into potential Medicare fraud and broader reimbursement practices. United Health has not been accused of wrongdoing and says it is cooperating with the investigation, standing by its practices. The scrutiny extends beyond Medicare billing practices, with the Justice Department examining Optum Rx, one of the nation's largest pharmacy benefit managers, and physician payments. Optum Rx is a valuable part of United Health, delivering $5.8 billion in adjusted operating income in 2024. United Health's financials have been impacted by rising medical costs, with its medical care ratio increasing from 83.2% in 2023 to 87.1% in the first half of 2025. Peers such as Centene Corporation and Elevance Health have also faced challenges due to rising medical costs, leading them to trim their 2025 guidance. United Health shares have lost about 40% this year, but recently received a boost after Warren Buffett's Berkshire Hathaway disclosed purchasing 5 million shares in the second quarter. UNH is trying to restore confidence among investors, regulators, and the public, with a new committee of its board established to increase oversight of regulatory and reputational risks. United Health maintains it has a record of responsible conduct and effective compliance, pointing to favorable developments in audits and litigation. Looking more onto the bright side, the Trump administration's investment in Intel might serve as a model for securing vital industries by buying stakes in publicly traded companies. UNH could be a potential target for government investment due to its significant reliance on federal and state healthcare funding. In 2021, 72% of United Health's $222.9 billion health plan revenue came from taxpayers via Medicare, Medicaid, and other government-sponsored insurance programs. United Health's growth is heavily tied to government partnerships, with 94% of its membership growth over the past decade attributed to these collaborations. This connection to federal healthcare spending might draw the Trump administration's attention, especially given President Trump's recent purchase of corporate bonds from United Health as part of a larger $100 million bond buying spree. The potential investment in United Health would fit the administration's goal to change how the government works with vital companies, supporting those that provide essential services. Commerce Secretary Howard Lutnick mentioned the Pentagon is exploring investments in large defense contractors, indicating a broader discussion about defense and potentially other sectors. United Health's strategic position and reliance on government funding make it a possible candidate for such investment. In the future, this could extend to companies involved in smart infrastructure if what's happening in Utah takes off. Ouster has announced that Econolite, a leading provider of intelligent traffic management solutions, has received a contract from the Utah Department of Transportation, UDOT, to expand the Ouster Blue City traffic management solution to over 100 intersections across Utah. This expansion follows an initial deployment at more than a dozen intersections earlier this year and is part of a 5-year contract between Econolite and UDOT. Blue City system combines 3D digital LiDAR sensors with perception software for traffic signal actuation and analytics, integrating seamlessly with UDOT's existing traffic signal infrastructure. This solution utilizes AI perception technology, trained on 4 million labeled objects to detect, classify, and track objects, optimizing signal timing and reducing congestion. Notably, Ouster Blue City is the first LiDAR traffic solution to receive NEMA TS2 certification and is compliant with Buy America and NDAA regulations. Ouster CEO Angus Pacala highlighted the traffic efficiency and safety benefits of the system, stating that the rapid expansion across Utah demonstrates its effectiveness. With over 400 deployed sites globally, Ouster Blue City has proven its capabilities in enhancing traffic management. Speaking of the future, Faraday Future's founder and global co-CEO YT Jia and global president Jerry Wang have made their first purchases of the company's common stock under Rule 10b5-1 trading plans, demonstrating their commitment to the stockholder-first principle. On August 25, 2025, XTIA purchased approximately $200,000 worth of FF common stock, while Jerry Wang purchased around $25,000 worth. These purchases follow the required cooling-off period and align with the terms of their 10b5-1 plans. XTIA plans to purchase a total of $560,000 worth of shares, representing the after-tax portion of his $1.2 million signing bonus as global co-CEO. Jerry Wang intends to buy $50,000 worth of shares. Additional share purchases are scheduled to be made by other FF leadership team members, including CFO Cody Meka and FX CEO Max Ma, under their existing 10b5-1 plans. Other financial moves revolve around Faraday Future recently launching its EAI plus crypto dual flywheel and dual bridge ecosystem strategy, introducing the C10 Treasury and C10 Index. The dual flywheel and dual bridge strategy combines electric vehicle development with cryptocurrency investments to support capital needs. The company recently secured a $30 million financing commitment for its C10 Treasury initiative, allocating 80% passively to the C10 Index and 20% for active management. Faraday Future has also expanded its Series B preferred stock with 3 million additional shares, designating them as Series B preferred stock without changing their preferences, rights, and limitations. Despite reporting a second quarter 2025 adjusted operating loss of approximately $27.4 million, Faraday Future has seen a 29% year-over-year decrease in total operating expenses to $21.3 million. The company has begun trial production of the FX Super One model and is seeking stockholder approval to increase its authorized common stock to support its $105 million financing and business strategy execution. On the technical side, Faraday Future's FX Super One has successfully completed its first round of U.S. Federal Motor Vehicle Safety Standards development tests for occupant protection in upper interior impact scenarios. The tests, conducted at the MGA Research Facility in Troy, Michigan, evaluated the vehicle's ability to protect occupants' heads during contact with upper interior components. A free-motion head form was used to conduct impact tests at multiple locations, after which the resulting head injury criterion was recorded to analyze potential head trauma. According to Andrew Hall, Director of Safety, CAE, and Homologation, the positive results align with expectations and provide confidence in delivering the vehicle's safety development in a timely manner. The FX Super One is currently in the trial production phase at Faraday Future's manufacturing facility in Hanford, California, where engineers and production staff are undergoing specialized training to support production readiness. Approximately 60% of trial production process planning has been completed, and the company will proceed with comprehensive vehicle engineering, including continued safety testing, development, and validation. The FX Super One, unveiled on July 17th in Los Angeles, is positioned as an electric AI MPV targeting competition with models like the Cadillac Escalade. The FX Super One co-creation and sales campaign is launching across 8 U.S. states, including events at Burning Man in Nevada and in Massachusetts starting August 28th. FF also plans to host a Go Global stand-up comedy festival and FX Super One showcase at its headquarters on August 30th. What an amazingly funny idea. Sticking with intelligent vehicles and technology, SoundHound AI has launched its generative AI-powered voice assistant, SoundHound Chat AI Automotive, in select Jeep vehicles across several European markets. This voice assistant enables drivers to perform traditional vehicle functions like navigation and phone calls, while also allowing for conversational interactions, such as trip planning and accessing vehicle manual information. Users can combine vehicle control commands with external information queries in single conversations, making it possible to ask complex questions and receive relevant answers without restarting the conversation. For instance, drivers can ask about museums in Vienna, request directions, and find nearby coffee shops in a continuous dialogue while controlling vehicle functions like windows. According to Michael Zagorczak, COO of SoundHound AI, the collaboration with Stellantis aims to redefine the in-vehicle experience, setting a new standard for intuitive, connected, and safe driving. This development is significant for SoundHound AI, deepening its presence in the competitive segment of applied AI and connected mobility. The partnership with Jeep's parent company, Stellantis, highlights the automotive industry's growing demand for intelligent voice assistants. SoundHound Chat AI Automotive provides Jeep drivers and passengers with a voice interface that goes beyond basic commands, allowing for natural conversations with the vehicle. The integration of SoundHound's voice assistant in Jeep vehicles also opens up opportunities for monetization in the in-car voice commerce market. With the potential to generate up to $35 billion annually for automakers, SoundHound's technology could unlock high-margin recurring revenue streams. Earlier this year, the company introduced a hands-free commerce agent that integrates ordering, payments, and loyalty into infotainment systems, further solidifying its position in the market. As automakers prioritize safer and more intuitive driving experiences, the demand for generative AI-powered assistance is expected to grow, validating SoundHound's strategy to scale its AI voice platform through partnerships. In the world of aviation, XTI Aerospace's CEO Scott Pomeroy published an article in Forbes discussing the future of vertical takeoff and landing, VTOL technology, and advanced air mobility. In the article, Pomeroy highlights how recent policy shifts, progress in FAA certification frameworks, and global investment trends have moved VTOL aircraft from concept to near-term reality. He notes that U.S. policy has formally pivoted towards supporting next-generation aviation systems, with certification pathways and infrastructure planning already underway. Pomeroy emphasizes that VTOL technology is operationally viable today and poised to meet urgent needs in both commercial and government applications. He points out that VTOL provides a distributed, resilient alternative that can relieve pressure on America's strained aviation backbone and enhance national readiness. The technology offers flexibility and dual-use resilience in civilian and governmental applications, including medevac, disaster response, business aviation, and logistics. Pomeroy calls on investors and industry leaders to recognize the strategic opportunity in supporting VTOL and advanced air mobility. With executive direction established and regulatory standards evolving, the U.S. has a window to lead, but only if capital, infrastructure, and innovation align quickly. XTI Aerospace views the vertical economy as central to the next century of aviation, integrating manned and unmanned VTOL systems, advanced materials, and distributed airspace management to build a future where air mobility is more accessible, resilient, and transformative. According to Pomeroy, this is not about a niche market, but about building the aviation architecture of the future, one that is faster, more versatile, and more connected to the needs of people, businesses, and communities. He suggests the company is well-positioned to play a significant role in shaping the future of air mobility. On the runway to reach this future, XTI selected the Garmin G700 TXI avionics system for its flagship TriFan 600. This selection is said to deliver unmatched situational awareness, enhanced flight safety, and future-ready cockpit technology. The Garmin G700 TXI system features dual large-format displays, synthetic vision technology, advanced flight management capabilities, and seamless integration with other equipment and services. Don Purdy, SVP and interim president of XTI Aircraft, said the Garmin G700 TXI avionics suite is a fantastic match for the TriFan 600, offering reliability, innovation, and pilot features for efficient and safe operation. With the Garmin G700 TXI flight deck, the TriFan 600 will offer pilots outstanding navigation, communication, surveillance, situational awareness, and aircraft monitoring during every phase of flight. XTI is making robust progress toward FAA certification, with developmental flight tests scheduled for 2027, and the TriFan 600 program has garnered significant interest across business aviation, emergency medical transport, and regional air mobility sectors. In the realm of the robots, the market is still in awe following Richtech Robotics stock price nearly doubling. Even after concerns about overvaluation saw a moderate correction, the buzz has begun. Details are still scarce, but rest assured you will get the goods right here as soon as they're out. In the meantime, to recap, Richtech has entered into a 2-year master services agreement with one of the largest retailers in the world to support the retailer's automation and robotics needs. The agreement, signed on August 21st, will automatically renew for additional 12-month periods, unless either party provides written notice of non-renewal at least 60 days prior to the end of the term. The deal contains provisions covering intellectual property and confidentiality, but no further details on the scope of the projects or financial terms were disclosed. This agreement comes amid the growing adoption of robotics and automation globally, as businesses seek to lower costs and improve operational efficiency. In the retail industry, giant operators such as Amazon, Walmart, and Target have heavily adopted automation to streamline logistics networks. Amazon, for example, has committed to investing $25 billion for the deployment of 1 million robots by 2030, aiming to generate $10 billion in annual savings. As part of this larger trend, Richtech Robotics attracted attention earlier for a sales agreement valued at over $4 million with Beijing Tongchuang Technology Development Co. Limited, along with a cooperation agreement with Beijing City of Design Development Co. Limited, to focus on joint research and development and commercialization of service robotics solutions. Additionally, Richtech's AI-powered robot, Atom, has served over 16,000 drinks at the company's Cluffy & Tea location in Las Vegas since its opening in February 2025. Impressive indeed. Good work, Atom. For more on stocks and crypto, follow Ascencore. Thanks for watching and have a nice day.